Lioness of Top Producer, and I have Jerry Gulke here going to share his comments on today's reports. Jerry?
Yes, good morning. This was typically can be a blockbuster report, and it was again today. The estimates for planted acres were wild, and I think we had discussed about prior to the morning report today, and I think we discussed it on the radio a number of times that the carryout could vary a billion bushels depending upon the yield, and so today what we got was a planted acres report that was again taken the first couple of weeks of June, and it was a planting intentions report. So bear that in mind, when you hear what they did. But they actually lowered the acreage report from what they had in June 30th, slightly in some areas. As it turned out, corn planted for acreages was 87.9, which is about what we were using, and up 2% from last year. And they had big acres increase in Illinois and Kansas, both up about 600,000 acres, and that's kind of what we saw in our client estimate back in March as well. The largest decrease in planted acres, interestingly, was reported in Iowa, down 400,000, and also Nebraska and South Dakota were down a little. Soybeans were up 2%. I guess the bottom line for the whole thing is we did not see the big increases in acres and that everybody, not everybody, but a lot of people thought there would be there. And so what we're seeing is if you ask somebody in North Dakota, and in particular myself in our county in North Dakota, do you intend to plant your corn and beans? And we'd say, yes, we intend to do that. But what actually happened after they took this report versus what I got a chance to do up there was we did not get any corn planted in North Dakota. South Dakota is probably going to be down 30% at least. We have clients up there that farm 40,000 acres, got half of it done. One guy 10,000 acres, got 9,000 acres to prevent planting. We've looked at this NAS report this morning, and we see nothing referencing any PP or prevent planted acres. And we're even seeing some of that in Illinois as well, that got a lot of rain and couldn't get in some spots, but they're small spots. So at any rate, the number is quite bullish. And if you extrapolate this out, and the other thing is the stocks came in, the stocks that we have on hand right now on June 30th. We've got 3 more months left, July. Actually, this is as of June 1, so we got June, July, and August left in feed yet. But as of June 1, stocks in all positions, on farm, in elevators, whatever, the stocks were 288 million bushels less than what the trade thought, or they reduced the stocks that much from what people thought would be happening. And you let your mind go back, and a lot of farmers, a lot of us thought, well, boy, we got low test weight, we've got this, we heard about the feed inefficiencies. And back in February and March and April and so forth, we said, we may have to wait until June 30th to find out the real efficiency or lack thereof, inefficiency of our corn that we planted. And a lot of this stuff got rejected, was blended in, and we heard nothing but from our clients about how bad the feed efficiency was. Guys saying, I've got to feed, when I get a load of corn, 1,000 bushels of corn, by weight, I've got to turn around and feed 1,100 bushels to get what used to be 1,000 bushels feeding rate in my feed. So I think we saw some of that. We learned something from this, and all those will be coming out along the way as the pencil pushers try to figure this out. But I think that comes from the poor quality corn that we have and had and still have left, a lot of which is going to be blended into next fall's crop if it matures properly, which it looks like it should. So our feed usage was up. What you're going to get from this is guys saying, wow, we got to raise our feed usage higher, and extrapolate that into next year. So that makes next year even more bullish, even though we may not see that, because people that trade grains on the Board of Trade aren't necessarily that as smart as the farmers that are producing it and feeding it. I've come to find that out by being here. But at any rate, we'll extrapolate that out and say, boy, we sure missed the feed usage. We're just feeding this stuff like crazy, including DDGs, and we're going to get wild about that perhaps. But facts are facts, and the numbers will be printed. What it looks like is that the bottom line again, and if you're interested in seeing the supply and demand reports, some charts action today ought to be wild. You just go to our website and click information and want it, and we'll send them to you. But what it looks like is that now with 168 bushel yield and the usage that we'll have projected into the next year, probably even without EPA, and even with only maybe 3 million metric tons from China next year, that we could lower our carryover with a record crop by 4 or 5 bushels an acre. We could lower our carryover even for next year. That's 2011. 12 that we're going to plant next spring. And again, this is a futures market, so we look far enough ahead that this thing gets real interesting further out. And if now you start to look at this and say, what will corn be priced next year when I go to plant it for the December of the crop I'm going to harvest next year, you've got to have a price incentive in there to meet all the demand that we're going to have, which then means you need to increase acres, maybe 2 million acres over this year or more. And then what does that do to soybeans? So next fall, you're going to say, well, we could end up with less soybeans, and the soybean crop even looks good. You should see that the usage, I think, was up on this year's our stocks again, and so you should see July gain on November pretty handsomely. But then, what do you tell South America next November? Do you then cut them off at the knees, even if you got 300 million bushels of beans left over? You cut them off at the knees and say, please don't plant any. And come to find out that in the United States we moved 2 or 3 million acres into corn, and now we've got a shortage of beans out there. So pretty interesting report. I figured it would be a blockbuster one way or the other, and you've got a lot of people leaning the wrong way today. So I would say if we get by without corn being up 20 cents, I'd say that would be a gift. And I don't know about soybeans, maybe 15 to 20 to start. The market's called 6 to 10 higher in corn. My elevator just sent me that quote, and I said, I've got some corn contracted for a lot higher than this. I said, I will buy it back for 8 cents under, or for 8 cent premium over yesterday in corn, and I said 15 in beans, and let's just call it square. I doubt he'll do that to me, but if you're short a lot of grain, a lot of guys, what will they'll try to do now is sell puts against it, saying that in these reports, it's not so much what we don't know is what now that we do know. We don't know how high corn is going to go, but we can pretty much establish at 99.9% that the market should not go lower than what we printed yesterday, or this week's low should maintain a floor under this thing for some time to come, or else the world went to heck in a handbasket and nobody's going to feed anything because they're all broke in Europe or whatever. But that's not going to happen anytime soon. So that sets a line in the sand that says yesterday's low is going into today's report is a line in the sand that we should not go below, and we'll see how the market closes. But if you've got a lot of grain sold, we went into the market yesterday with some calls bought against some short positions, and as those of you who have been listening to this, we went as high as 125% sold in corn. We got back to zero and said finally yesterday, we got to do something in this last week and put some hedges back on again. So we hedged 15%, and yesterday we sold futures and bought calls. So we will lose 7 or 8 cents out of this, but that's far better than being naked short or cash contracted at a time going into a report that was usually very critical. So wheat they did nothing to, but now we will be able to perhaps feed wheat or have to feed wheat, because maybe corn will be too expensive, relatively speaking, and we may get rid of some of that feed that way, some of that wheat stocks. But the other thing that is maybe good news for China is they got some rain. So the pressure may be off as far as them buying. Gosh, are they going to buy 150 million bushels or 300 million next year? Who knows? They haven't harvested their crop yet, but they got rain, so that forestalls any problems with it. But if it turns hot and dry again and they don't produce what they think they're going to produce, then they'll be back in here for some grain. But the bottom line in all this is that now we're at a position where you've got to get a good crop. We have a good one coming. It's a good thing that we do, and we'll see where the prices take us from here. We've been down almost every day, 6 or 7 days since last week. So now we'll see how that goes from here. We should gap higher today and leave kind of a technical island, but the bottom line is you got a lot of people negative to this stuff, and all the brokers and analysts in the Board of Trade here said, boy, these farmers are sitting on a lot of grain. They didn't move this stuff. It's going to all come to market before harvest, and we should see 260 corn. You'll probably read a lot of analysts out there projecting 250, 260 corn for next fall. We thought we'd see $3.30 in June sometime and post a low. Admittedly, this China thing messed us over, but we got to that 330 level, and I just real reluctant to have much sold down here. My cash corn in northern Illinois reached $2.99 last night before today, and that is very cheap. There's a lot you can do now with $3 corn, and so we'll just sit back and let this market rally. And if you have grain that you've got to sell yet, I would just sit on it. Don't get caught up in this idea of selling a 10-cent rally. We got a long time till harvest yet, so